All right, everyone, welcome back for the episode of Carnivore Trade. Today is Friday, July 8th, 2022. If you like the content, give the video a thumbs up, subscribe to the channel, comment on the video, or come find me on carnivoretrades.com for swing trading alerts and analysis. Another winner taken today. That's 3 winners in 4 days this week. We did take profits on Apple, so 5.5% there. And we have a break-even stop in on this one, and we're looking for more upside on this. You guys know my kind of thesis here is that we are in for some type of a summer rally, and we're kind of looking for the market to float up for a little bit longer here. Now, flipping back over to the spiders, you can see we had mostly an inside day, and we did have that jobs report, so we talked about that yesterday. It came in stronger than expected, so that caused the market to lose some of the gains. We gapped down, and then we sold off a little bit into the first half hour to 40 minutes or so of the day. And then we kind of floated back up, and then the short sellers came back in and tried to push us down, and they just were unsuccessful, really. And the reason for that is, take a look at the volume here, it's still pretty light. So only 72 million shares when it was all said and done. That's including after hours. Friday here for the SPY. And the bottom line is, when there's this kind of volume, it's very hard for the short sellers to push the market lower. Generally, shorts want heavy volume in order to achieve their goal, and we just didn't get that. And that's kind of playing into the thesis that I've been talking about here, is that we will get a summer rally. I said there would be a rally or a pivot point around the solstice. We got one on the 21st, right after this low on the 17th. We had a 3-day weekend there, 21st, and then last week, Thursday or Friday, I said by Monday or Tuesday this week we would have, well, it should say be Tuesday and Wednesday, because we had today was a short, or this week was a shortened week as well, but said by early this week we'd have a pivot, another pivot in place, and we got that. So 1, 2, 3 days up, and a little inside day here on the spiders. Triple Qs actually managed to scratch out a gain, as big tech was really the big winner on the day. So take a look at Apple. We were just talking about that, up 0.5%. I believe Amazon had an inside day. Google was the other one that had the really big gain. Yes, so 0.72% on Google, but take a look at this, 1, 2, 3, 4 up. Again, we talked about the higher lows on these big tech stocks and how that was likely to play into the summer rally thesis. Tesla here as well, higher lows, and nice little bid today. Twitter takeover is no longer on, so Tesla actually popped a little bit after hours, about $20 after hours on that news. So that helps them out there, with Elon Musk being less distracted. Microsoft sideways here, but again, you see these kind of WV patterns. I've been mentioning them every single day here in these videos, and you know, we got that higher low, and now we're starting to push up. Now, as far as the spiders here, we're not out of the woods until we get above this pivot. You guys know I've been talking about that, and then, you know, that really kind of coincides with this down-sloping trend line. If you get above either of those, I give the market the upside bias to probably about 408, 410. You know, you'll have a pit stop right here at this gap fill, but I think I wouldn't rule it out and move up to that 408, 410 here area on the spiders. Triple Qs here, we talked about this trend line yesterday, and we went up into it, and we just kind of pulled back off of it intraday. You can see right here, we, you know, kind of went up and pierced it, and then we just kind of rode it a little bit intraday. So Q's not even really reacting on that trend line, and I'll take that as a bullish sign. Again, with the light volume, sometimes these resistance levels, they just don't work the way that they would with heavier volume. And again, that's kind of playing into the thesis of the light volume, summer doldrums type move here. And I've been just saying, you know, the bears have had it really easy for the last 6 months. And at some point, the rug's got to get pulled, and at some point, you know, things are going to quiet down a little bit. But later in the year, we will see more downside. That's been the thesis all year long. I said there was going to be a sell-off first 2 quarters of the year, and then a bottom in June, maybe early July, and that is playing out really well here. So far, so good. But, you know, we got to get through these pivots before we can really, you know, kind of claim victory on that. But in any case, it's been a pretty much dead-on year for the most part. It's been a tough year to trade. Let's not make any bones about it. But you know, those cycles have been working out really well for me, and we'll continue to follow them until it falls off the track. So in any case, basically an inside day here for the most part across the board. Russell 2000 down just 2 pennies here on the IWM, so just 0.01% down. Again, a flat day. Again, went up basically into that 50 moving average, little inside day. Nothing wrong with that. Markets may want to consolidate a little bit here, so you get a nice up move and a little inside day. If we start consolidating, it can build an army to take out that pivot high and this trend line. So it's telling you it's going to consolidate to move higher. We'll see if it does that. Overall, though, not terrible action here across the board. Here's the diamond here. Again, a nice little inside day, and you know, wouldn't make too much out of it. Just kind of a pause candle there for the Dow. Let's take a look here at semis. So semis actually had a nice day as well. This is one of the winners, up 0.5% here on the SMH. And, you know, basically went right up into this 20 period moving average. Now, it should be minor. You've traded through it so many times. You did get a little extended, so I'd expect a little bit of a reaction off of it next Monday. But overall, you know, it's holding up well. It had a nice bid today, and, you know, it's just in an oversold condition. We've been talking about that trend line. The monthly trend line going back to 2015, nice reaction off that, got a little pierce. So I'd say there's, you know, there's still a little bit of upside potentially left in the semis. As far as upside targets, again, you got to get through this 20 period and then this 220 level. If you can get through that, then, you know, there's a chance you can get back up into this 235, 240 area, but that's kind of down the road. We don't want to get too ahead of ourselves. It's still a weak chart, still below all 4 major moving averages, so definitely have to respect that. IGV here, this has been one of my leader sectors here over the last couple of weeks. You guys know that. Take a look at the little W pattern, and you could almost make a case. Yeah, you can make a case that you got an inverse head and shoulders here. I mean, it's a bit of a sloppy pattern, but this is technically a head because this went lower than this pivot. So, you know, you're basically right there. But in any case, you know, it's stalled out at that trend line there. Got above the 50 moving average, so that's a good sign. Again, if this consolidates a little bit, this could have some serious upside. You know, these beaten down sectors are now starting to outperform. We've been talking about these growth stocks. The cloud stocks have been outperforming very nicely. So, you know, I could see this breaking out and pushing higher. You know, you get that 100 moving average. You'll have a lot of resistance up to that 320, 315, 320 area. But there is, you know, potentially some upside in the cards in some of these names if we can get some, you know, daily and maybe weekly chart consolidation. XBI here again. You know, this is up into resistance here, but it's still scratched out a 1.16% gain. Take a look at the monthly, though. This is where you're into resistance here. So you get this big red bar, and then you've got that 100-month moving average, which you confirmed below 2 months ago. And now you're into all these tails. So these tails here were your support area. You had 1, 2, 3 hits of that. You couldn't break through it. Then you broke through it, so now you're into that again. So that should stall out there, but it's been holding up well, and that's just what happens when you have this many shorts in a sector. It just, you know, it'll blow through some short-term. You know, this should have been on short-term resistance, but you kind of flagged into it. So I guess you did take it out a little bit, but this right here, this pivot low, should have been some good resistance, but it was able to blow right through it, and that's just because there's so many shorts in it that it's just squeezing. So that's, you know, the type of action you can get in this market, and it's the type of action you get in some of these growth stocks that have gone from, you know, $350 down to $20 a share. So that's the type of market we're in right now, and there's opportunities in some of these names if you're willing to take risk, but obviously you don't want to put your whole portfolio into them. You know, just a couple percentage points here and there, but you know, we've been able to do that pretty successfully so far over the last couple of months on some of these names. Anyways, here, moving on, let's get on to the transports. Again, inside day, it's still a weak chart. It's above the 20, so we'll give it that. And you still have an inside bar here. So 1, 2, 3, 4, 5, 6, 7, 8, 9 inside bar candles right now. And, you know, it's trying to consolidate. It's trying to do it, you know, do its thing, but it really needs to get above this trend line to get any sort of momentum. You got that 50 moving average above that, but again, it's still a weak chart. Looks a lot like the XLF. So we'll talk about the financials here. Same thing. It's almost the same exact chart here. You know, a little inside bar, 9 candles inside, but it's below all the, you know, these 3 moving averages on the daily and still inside of this red bar. You know, upside, if it breaks out, could be up to that gap fill area. But for, you know, for right now, it's not in the best of shape. Same thing with broker dealers, although broker dealers are in a little bit better shape here, which is strange with an inverted yield curve, as we're seeing Goldman and Morgan Stanley kind of outperform the JP Morgans, Bank of America, Wells Fargo, and Citigroup type names. So the broker dealers are holding up for what that's worth, but again, transports, fins are a little bit weaker right now, again, with that inverted yield curve. Anyways, here, speaking of curves, let's take a look at the 10-year. So continued higher today. Again, 1, 2, 3 up. Nice bounce at that. You know, would have felt better if it filled that gap. Maybe too many eyes on that gap. A lot of the times when you have an obvious gap fill like that, the market makers will stop it right before it gets there in order to kind of rug pull everybody. So that can happen. But if you can take a look on the weekly, we've been, you know, basically went right into that 20-week moving average and this kind of little trend line here. and got a nice bid off of that. So nice little pop here for yields. I'm not convinced that they're done backing and filling yet. I still think we have lower to go. Here's the 30-year, a little bit more extended from the 20-week moving average, but still got a nice little bid there anyway. Again, kind of went into that gap fill there and got a nice bid off of that. So yields did have a nice week. We'll see if they make lower highs here. But again, I'm not convinced that they're done backing and filling. I think that, you know, we had the strong jobs number today, but I think it's just a matter of time before that really starts to shift to the other side. Anyways, HYG, so up just 6 cents today, but it managed to scratch out a gain. Again, you know, nice little follow through from yesterday. So you confirmed above the 20 moving average today. Well, you know, we'll give that the benefit of the doubt. It's still got these, still below these pivots. But we'll see what it does here. You know, it's holding up okay. Won't make too much out of it for now, but it's not doing anything terrible. Obviously, this will be problematic in the future if it can't turn around. It's going to need the Fed to do that. But, you know, for right now, it can hold up. You know, it can have these little squeezes, as you can see there, which we had in late May, had a mega squeeze there, which, you know, it doesn't look like a lot. You know, 76 to 80 doesn't look like a lot, but for an ETF like this with a low beta, it is. So we'll see. We'll keep an eye on it and see what it does next week. Anyways, here, so we talked about transports, energy, fins. Let's go to energy here. All right, so crude again, nice little bounce, 2% gain, follow through from yesterday. Got back above this blue trend line, so that's a positive there. This trend line is starting to get much, much more minor though, so just be aware of that because we've traded through it so many times. You got 1, 2, 3, 4, 5 hits now. You could call this whole hit basically like a cluster essentially. So this is starting to get more minor, but it is, you know, an important psychological level. I'd say short term your upside is probably to that 20 MA, 50 MA necktie right there, but there's a lot of resistance up here at 111.45, which is this red bar high, and maybe even just at 109. So right in that area, I'd say there's pretty good resistance. But, you know, crude, nice little bounce, nice follow through. Would have loved it if it just pierced that 95 handle. It just didn't quite do it. Got to 95.10. Nice bounce regardless. Let's take a look at the weekly because this is important. This is the first week since December 13th that we closed below that 20-period moving average. So that is significant to me. That's to me that we've done technical damage now to the chart. So the first time that we've done any sort of technical damage has been, you know, it's been 6 months, over 7 months now, since, you know, mid-December. We've kept that weekly uptrend intact, and it is now breaking. Now, that doesn't mean it's going to go straight down, doesn't mean, you know, it's going to crash or anything, but there has been technical damage done, so we have to respect that. And again, I think crude's going lower, energy's going to go lower, but it's going to be a good buying opportunity in the future, so that's the way I am looking at it right now. But overall, near term, you know, it can continue this bounce up. I think it puts in a lower high. And then you guys know I've been talking about 80, 85, somewhere in that range. That is what I've been looking for a while. And, you know, it takes time, but I think we will get there. So we'll continue to watch and see what that does next week. XLE, same kind of deal, was flattish, did kind of gap up today. So it kind of gapped up on the strong jobs number, kind of inverse to what the market did. And then kind of faded off a little bit, basically a flat finish, nothing too crazy. XOP, same thing. OIH, all the same thing here. Although OIH did manage to scratch out a gain. Again, your upside here is this necktie, 220 down sloping, XOP, you know, same 100 and down sloping 20, and then the same thing on the XLE. Although I think the XLE probably has a little bit less downside here, as that 20 down sloping has already intersected that 100. In the near term. Anyways, nat gas here, a little bit just of a pause. So a nice pop yesterday, kind of reversed this bearish kind of flag consolidation. And, you know, just a pause day. I still think this has a little bit more upside, but I do believe this is headed lower as well, ultimately, but once this bounce is concluded. But it can hold up here in the near term. And then again, this was kind of the reason for the bounce this week. Just, you know, straight down, oversold into that 50-week moving average. You're probably going to get a bounce there, especially when you consider these levels. This, you know, 550 level, that was your breakout. So you're retesting the breakout. You're usually going to get some type of reaction off of that, especially when it coincides with the 200-day moving average and the 50-week moving average. You're generally going to get some type of reaction there. So nice move there for nat gas on the week. Dollar index did put in a little bit of a tail candle today. So I wouldn't call this a topping candle. It could be a topping candle. I would prefer to see a little bit more red on it, but you know, you did have a little, you know, a shooting star there. It did pull back, so maybe the, you know, dollar can pull back in a little bit. that should help out the equity markets a little bit. And again, another kind of just to go back to the summer rally theory with the light volume, the dollar ripping higher should be causing markets to freak out, and it's not. So again, the light volume can do a lot for the upside, and it can cause a short squeeze, and that's kind of, you know, the thesis we've been going for here into the summer. So just keep that in mind, you know, write that down. But essentially, dollar index did pull back a little bit, so that could give the markets even more of a lift. It can also give gold a lift, which has been soft here. Kind of a dead cat bounce here on gold. You know, I would think that this would have rallied a little bit more today, if not yesterday. And the same thing with silver, kind of a weak, kind of just little inside pattern. So now silver going sideways after a big drop. So that does look like it wants to go lower as well. Might not go down in a straight line. You might get a counter trend bounce, but I do think there is lower prices in both gold and silver right now. Now the winners today were platinum, big rally off the lows that hit our level. Was looking for 840 for a long time. We got a nice reaction off that strong upside. You'll have upside to 900, and then, you know, it possibly can get up to, you know, 960, 980 after that, maybe 1,000. I wouldn't rule it out. But for right now, nice little bounce there on platinum. And the other winner was palladium, finally having kind of an outside candle. Look at the tight range. You know, I've been kind of just blazing through palladium every single day because it doesn't do anything. But finally getting a nice bid today with some good volume. So a nice pop there for palladium, getting back above the 200-day moving average. So nice little move there. Look at this, went right back into that old trend line. Look at this this X marks the spot here on these trend lines. Went right there, and that's where you stop. So maybe it pulls back a little bit in the near term, but nice little pop there for palladium. And copper, also just kind of a pause candle, little inside move. You know, we put in a nice tail candle on Wednesday, nice pop Thursday, and then a little inside day Friday. So this should have a little bit more upside here in the near term. Maybe it has to flag a little bit, but ultimately I still think that copper is going lower as well. But in any case, nice little move there today for spot copper. All right, Bitcoin here. Faded off the highs a little bit today, and it is now Friday night, so we do have a new candle here. But again, kind of like the markets here, we went up, we had a nice pop yesterday, and then just had a little inside kind of inverted hammer candle. Nothing terrible. So I would like to see this flag a little bit. If it can do that, we can get a pop to 25, 25.50. Now, and then after that, you might get up to that 28,000 area. I wouldn't rule it out, but let's not, you know, get ahead of ourselves. Bitcoin's been weak. You know, we're not gonna sugarcoat it. It's been weak. Take a look at Ether here. You know, it hasn't even gotten through that double top. I'd rather see the alts kind of outperform Bitcoin in the near term. Doge actually has a decent little kind of rounded bottom here, although it's still below these pivots. I would prefer it to be testing that. Polkadot, you know, take a look here. You know, nowhere close. Litecoin, nowhere close to these pivots here, whereas Bitcoin, you know, has gotten above it, so it is in better shape. But that tells you, you know, that the Bitcoin is like the Dow of crypto, and then, you know, Ether is like the S&P, and then every one of them is the rest of them are like the Nasdaqs and the Russells. You want to see the Nasdaq and the Russell leading, not the Dow. So that's kind of a good analogy for it, I suppose. But overall, you know, it's holding up okay. But give it the benefit of the doubt for now. It got above that 20, made a higher high. So again, next task is getting above 22,991. And if you can do that again, you can get to that 25.5 area and then possibly up to, you know, 27.28. So not terrible stuff there for Bitcoin. And again, if it can continue to rally, that will help out the markets. It will signal a little bit of money flow back into the equity markets and kind of in the risk area. Anyways, guys, so again, to wrap up, look for this pivot here. If we can get above that and this trend line and confirm, you know, we've had some fake outs before, but if we can confirm, you know, I would give the market the upside bias, and I think we can have a nice little summer rally where things kind of quiet down for a while, and we don't have massive, you know, 2, 3, 4% moves every single day in the NASDAQ. So that's really what we're looking for here in the short term. But again, got to get above that pivot. You know, triple Q's got to get above this trend line. Would like to see the semiconductors finally get above that 20 moving average. The IGV breaking through this area would be pretty bullish in my opinion. So we'll see what we get here. But overall, market is behaving well, and it's behaving at, you know, about the way I've expected it to here over the last couple of weeks. So we'll see what we get moving forward. Anyways, guys, going to wrap it up here. Have a great weekend. Take care. Come find me on carnivoretrades.com, and I will talk to you all next week.